morning, good morning. Thank you guys so much for tuning in to today's live stream. I'll get started as soon as I'm finished with this little stream, or not stream, but chess game here. Let's go. Okay, for sure I'm winning in this position. I actually cannot see myself not winning this. I can't go there. No, why would I sacrifice that? Kinda need control. If he goes here, I have to go down. Where does this bishop go? Okay, I go here now. Does he go there? Okay. That would make sense. That makes sense too. Let's try to keep the pawns here on the... Okay, he's just out of time. Completely out of time here. I have time to do things. Let's go here. I have time. I had a lot of time there. I didn't need really get stressed or anything. All right, but yeah, sorry about that. Let's getting into the actual charts here. My daily objective coming into today, and today is January 24th, 2025. My daily objective was for us to take out this daily high. So based on how we closed here on this daily candle, I can anticipate for this daily high to be taken, right? Simply because of how we closed here. The way that we closed here on this specific daily candle is telling me that we could possibly take out its high because its closing price is closer to its high than its low, right? But with the way that we created this fair value gap right here, with the way that we created this fair value gap, suggests to me that we could possibly rebalance it because we didn't close above this daily swing high. So there were two possibilities that I had coming into today, was that we could either rebalance this inefficiency here, or we could take out this swing high and possibly take out January 22nd's high of day, Wednesday's high. But what we did do was, on the hourly time frame, like I said, previous day high was the draw of liquidity for me, right? There was two scenarios, and the first scenario being previous day high ended up being the draw of liquidity. So in this specific case here, notice how the daily high okay, so notice how the daily high is the same high. Let me just go back just a little bit. So notice how that daily high is the same high as that 4-hour high, 6-hour high, 8-hour high, and 10-hour high. What does that tell me? Well, that tells me that we're most likely going to complete the daily objective within the next 4 hours, right? Because like I said, the previous day high is the same high as the 4-hour. And this idea is called scoping. If we're able to scope into the lower time frames and base our original model here, which was the previous day high, and we're able to scope into maybe, like I said, the 4-hour, the 6-hour, whatever the time frame may be, that just allows you to understand when prices should complete its specific objective, right? And in this case, the specific objective was, like I said, for us to take out previous day high. And I do want to show you guys the 2-day time frame too. So this 2-day candle here, notice how we created this candle. Let's apply that same concept, right? With the way that we close here on this two-day candle, can I anticipate for the daily high to be taken, or can I anticipate previous day low to be taken? Based on this 2-day candle, I can anticipate for the green line to be taken, which is previous day high. So my higher time frame objective for, I guess, the trade that I'm about to show you guys is the 2-day high. So with that in mind, with that higher time frame in mind, I need to find a model, right, that aligns myself with the 2-day time frame. And like I said, what did the daily candle suggest? This daily candle suggests is that we could possibly take out its daily high, which is not the same high as the 2-day high. So the 2-day high is the joint January 22nd's high of day. Previous day high is completely separate from that. So if you were to take this model, you would have taken this trade based on the higher time frame objective, which was the 2-day high. Your model would have been on the daily time frame. However, because of the idea called scope, your model now becomes the 4-hour, because your objective should be completed within the next 4 hours, because the 4-hour swing high is the same high as previous day high. Your entry pattern, so from the 4-hour, you would go down to maybe possibly the 1 hour, right? And what do we have here? We have a 1 hour fair value gap. This 1 hour fair value gap should be treated as a support level, right? So if we're going to respect the daily model and the higher time frame objective, we should trade into this fair value gap, respect it, and expand higher. That was the idea here. And I didn't take this trade because I was, I think it happened when it was, at 6 p.m., which was when I was in class, and I didn't have, I guess, the luxury to be on the charts because I was in class. And but this is a pretty solid setup here, to be honest. So coming into this morning now that the daily objective has been completed, I no longer can use this. I can no longer use this daily time frame as my draw of liquidity, right? Its draw, or I guess its daily objective, has been completed. So now I must use the intraday time frames, such as the 4-hour time frame, 6-hour, the 8-hour, or the 10-hour time frame for my intraday buys, right? And the reason why I'm able to do this is because every single time frame has an objective, right? In the trade that I just went over with you guys, the daily time frame had an objective, which is higher prices. The 2-day time frame, which has an objective, is I want to see higher prices here on the 2-day time frame. Same idea here too on the 4-hour time frame. Once this 4-hour candle closes, we will have an objective, right? We will kind of see where prices wants to go once that 4-hour candle closes. And the same thing here, because we're about to close here on the 8-hour candle as well, we also are going to generate another objective. So both the 4-hour candle and the 8-hour candle closes at 10 a.m. Eastern time. So that just allows me another, I guess, objective. And it appears that if we can create a bullish 8-hour fair value gap, I would try to possibly take a long, because it looks like we are respecting this 8-hour fair value gap as of right now. So let's see here. Yeah, if we can create a bullish 8-hour fair value, or 8-hour candlestick, 8-hour power of 3, then I'll possibly consider taking a trade to see higher prices here. But that all depends on how we close here on this 8-hour candle, which is in about 15 or so minutes. But yeah, that was the little, snippet from yesterday's I guess closing. But yeah, we expanded a decent amount actually coming into near the end of the day here, because yesterday the price action yesterday was I don't want to say bad, but it was very low probability. It's like this back and forth here is terrible. And someone, I think it was Justin Wireland, he says it looks like a barcode, and it literally like tell me this doesn't look like a barcode, just back and forth, right? Like, look at the way that barcode looks. It just like let's pretend that every white line is an up candle, so like up down, right? Look at this. Up down, up down, up down, up. It's just a lot of back and forth. And this is just us consolidating and just waiting for the right time, right? Here it's just, I don't know. I honestly don't know. I can't tell you what we were doing here. Just consolidating, waiting for that right time to, just prices waiting for the right time. Because, did we have news yesterday? We had, we had unemployment claims and President Donald Trump speaking yesterday. That was red folder news. Today we have flash manufacturing PMI, flash services PMI numbers being released in about a minute or so. So here, there's that. I just saw a spike in price action. So yeah, we just got that surge higher here, so we could possibly take out January 22nd here, coming like during the morning. Who knows? But yeah, let's just wait and see. Let's just wait and see how we close here on this 8-hour candle. But yeah, what a interesting week so far. It's been interesting. And keep in mind it is Friday, so if we, let's just say that if we were to create new all-time, or I guess not new all-time highs, but new highs here this week, I would like to see us have some sort of retracement, right? Because once we take out the high of the week here, and the high of the week is January 22nd, 2025 high of day. If we do end up taking that high, I would like to see us like possibly retrace back inside this range, back inside the weekly candles range, which is typically what a typically Friday's behavior, right? We have the open here coming into Sunday. We went higher, we took out the weekly objective, we manipulated lower, and then we continue to expand higher. And then after prices has completed its objective, right? Its weekly objective, and it's near the end of the week, and we have expanded a decent amount. We could expect some sort of retracement, right? Some sort of retracement back inside the weekly range. The weekly, usually we typically tend to close within the 0.2 to the 0.3 level of the weekly candle. So somewhere around this blue shaded box here. But yeah, that's just, it's sometimes, but yeah, I'm not gonna guarantee you that it happens every single time, but yeah, let's just continue to watch. There's no need to really be too forceful here on what you want to see on the markets. Alright. I'm just gonna stay active onto the charts actually because it's about to be 8:50, and at 8:50 I do, or I guess 8:50 my time, Central Time. At 8:50 I do want to just stay present in front of the charts just so that I'm prepared to see what's going to happen in with the closure of the 4-hour candle and the 8-hour candle. And that's just something that I'm trying to work on too, because yesterday, or I guess last week, we had a very interesting week because I took 2 trades. In both those trades I was frantically like just going back and forth. There's just, yeah. Okay, so even ES has completed its daily objective too. It's just funny. So we opened up at 18. Yeah, this would have been a solid model, to be honest. Solid model. It looks like we're just gonna continue to expand higher here, and I'm not entirely too sure here, but ES is a lot relatively closer to its all-time highs than ES, or than NQ. Because NQ, let me see where we're at. We're nowhere near all-time highs here on NQ. So, like, if we have some sort of, SMT here between previous month's high, between NQ and ES, that would signify a reversal. But who knows? Who knows? Who knows? All right, so NQ, 8 minutes left. All right, well, I'd say 9 minutes left. 8-hour candle looking pretty bullish. 4-hour candle looking pretty bullish as well. And yeah, let's just continue to watch. Oh yeah, to go back, my stop loss for this specific trade here, I actually was wanting to see if we were going to get a immediate rebalance of some sort, right? And I believe, was it on the 6-hour time frame? It might have been on the 6-hour time frame, because notice how this 6-hour candle's high is, right? Yeah, that's where my stop. Okay, so the thought is, that idea of, the reason why I had this here is because, okay, once we open up on this next 6-hour candle, right? And like I said, my objective here coming to this trade was for us to take out previous day high, and previous day high ended up aligning ourselves perfectly with the 4-hour, 6-hour, the 8-hour, the 10-hour, and the 12-hour. I didn't want to see us open up on this next 6-hour candle and have an immediate rebalance and then take out the objective. I mean, that could happen, but I was willing to risk that it wouldn't happen. And that's essentially what having a stop loss is about. So my stop loss actually was at that red line, because I don't want to see it happen, right? And I wanted to see us, do some sort of open. We dip into the 4-hour, 1-hour fair value gap, and then I take my targets at previous day high. And notice where I am also buying as well. I'm buying below the previous day open, or I guess the daily open. So with this next 6-hour candle, I am buying actually above this gray line. So that's the new day opening price, right? Right there. So I'm just gonna put that as week. So this gray line here is where we opened up yesterday. And notice where my entry is at, below the open. That's essentially buying in discount. That's just one concept. ICT states, if you want to be a buyer, you want to be a buyer below the midnight opening price. If you want to be a seller, you want to be a seller above the midnight opening price. And this concept applies to every single time frame, because every single candle is fractal, right? It's very it's very fractal, because like I said, every single candlestick has an entry, or has a has an objective. All right, yeah. I mean, based on how we're closing here, I would like to see higher prices, but I would like to see higher prices here for the morning, but it appears that we might not even get an entry to it. We know what the higher time frame objective is, but I don't know what my model is going to be, which is, I wouldn't say problematic, but it doesn't present me with an opportunity to take anything here. So that's completely fine. Yeah, it looks like ES is about to take out all-time highs. And NQ is like nowhere near that, which is kind of interesting. actually, like, I want to buy Tesla, but I wouldn't say I'm hesitant. I'm just waiting for the right opportunity to buy it, right? Because if we look on here on the 12-month time frame, I can anticipate for this candle's high to be taken, and that all-time highs here at 488.54. That's my price target here. And to be honest, if we break this swing low here, like let's just say that we break the swing low here on Tesla, I could actually see us selling off. Well, I won't say like to $7, but that's just something that I could see that's possible. But or we can continue to expand higher. But if I'm presented with an opportunity to purchase at 390, I would actually do it here on Tesla. $390, yeah, 310 per share. That's something that I would actually be willing to buy. I'm willing to buy below that. Even like this fair value gap too here. Tesla earnings. Alright, we're going back to NQ. Two minutes left on this 4-hour candle and this 8-hour candle. It's looking bullish, right? So like based on the way that we're closing here on this 8-hour candle, let's just say that we close above. If we close above the second fair value gaps candle's high, so if you close above this black, or I guess gray line here, I would treat this fair value gap here as a breakaway gap, and then the idea for us to attack the 8-hour high is just even more prominent, right? But that all depends on how we close here in 1 minute. But if I were to go onto the 15-minute time frame, yeah, it's just I know what the higher time frame objective is. It's just there's no model for me to base my entry pattern off of. It's just like, am I supposed to take it off this 15-minute time frame? If my higher time frame objective is the 8-hour time frame and the 4-hour time frame, I don't have a model because the 15-minute high is the same high as the 8-hour high. So there's no we're not rebalancing in efficiency. We're not expanding towards any higher time frame liquidity, because the higher time frame would have been the 8-hour. It's just there's nothing for us to base our trade off of. It's kind of not confusing. It's just kind of hard for you to, I guess, wrap your head around, which is what confusing is generally is. Kind of contradicting, but yeah, I mean, I don't know. No model. So I'm just gonna watch. There's actually nothing wrong with just watching here. But yeah, once we close here in about 7 minutes or so, and we take out the 8-hour high. So yeah, we did end up closing above that second fair value gaps candles high. So now I would treat this blue shaded box here, this 8-hour fair value gap, as a breakaway gap, meaning this is the 10 o'clock open, right? I don't want to see us trade all the way down here and then take out the 8-hour high. It's more efficient for prices to take out 8-hour high first. So let's see. On ES, on NQ, there we are. So I'm going to actually mark out the 10 o'clock opening price because it's kind of important. Because I'm anticipating for the next 4-hour candle to be an open high-low close, right? It would make sense for me to be buying below the 8-hour candle's opening price. So specific time, that's the 10 o'clock open right there. And I want to be buyer below that black line. I want to be a buyer. Let's see. Yeah, I would have to treat this 15-minute fair value gap also as a breakaway gap. So this is that second candle's high. Where do we close here? And the way that we close here on the previous 15-minute candle, which is this candle right here, I'll make that a dark red line. Notice this candle's closing price here is above the black line. And I'll make that black line a little bit thicker. Actually, I'll make it blue. So notice how that red line is above the blue line. That means I would treat this 15-minute fair value gap as a breakaway gap. So I don't want to see prices trade into here within the next 15 minutes at least. Within the next 15 minutes, I don't want to see prices trade into that blue box. But, as I said, it could happen. Who knows? But my higher time frame objective is still for us to take out the 8-hour high. And I'm actually just going to stick onto the 1-hour time frame just because there's no need for me to be on the 1 minute yet. I don't have an entry pattern, so I'd rather just rely on the higher time frames, rather be so zoned in and just focus onto the 1 minute. But yeah, with that, as of right now, I'm able to go over the pros and cons with you guys from previous week. So previous week was rather it was interesting. Every single trade that I took, I was able to identify what a higher time frame objective was. I was able to explain what my model is going to be, and I was able to explain to you guys what my entry pattern is, right? So like I said, every single trade I took, I had a higher time frame objective, I had a model, and I had an entry pattern. Even though I lost 2 trades and won 1 trade last week, that's completely fine, right? The outcome of the trade isn't in my control. However, how I execute my strategy, how I'm able to follow my rules is something that I can control. So I would feel more content and fulfillment with me actually sticking to my rule sets than with me winning and not following my rule sets, right? You know, what you should be focused on is how you execute, is your control over your execution. So for me, like I said, requirement of a higher time frame objective, a model, and an entry pattern for every single trade, right? If I'm able to explain to you guys what my higher time frame objective is, what my model is, and what my entry pattern is, then I am at peace. I find fulfillment from that. Second, implemented standard deviation projections to get further targets, and I'll maybe there's a trade that kind of allows me to do that, but as of right now, I don't really have anything to show you guys standard deviation projections. But just know that last week, I was able to implement that strategy or a concept to my trade. Third, stay patient with the charts. And this all goes back to the idea that you aren't in control of the market movement, right? You don't control whether the market goes up or down. You can control how you execute on your strategy. So don't force things to happen. Don't force a idea to manifest itself onto the markets. The markets is something that you can't control. Not saying that you shouldn't manifest, but you have to understand, like, the markets is not in your control. if you're manifesting something for yourself, that's within your, that's you. But this is the markets, completely different entity here. So just yeah, just understand that, and allow the opportunities to come to you. Like I said, if you force a model and it's not even there, if you force an entry pattern, so forcing is something like this. So let's say that your entry pattern is a fair value gap, right? But you really, really, really think that price is going to do this thing. Like, let's just say prices is, you really, really think that price is going to take out previous week's high. And your entry pattern always has been a fair value gap. But however, you're like, oh, I know price is going to take out previous week's high, but there's no fair value gap. I'm going to force this trade to happen. So I'm going to take this entry and I'm going to be like, okay, I'm taking it on an order block. That's you forcing something to happen. There's your entry pattern, right? Has always been a fair value, or has always been a fair value gap. So why are you forcing it to be an order block today? That just completely negates the idea of a strategy, and it's something that you shouldn't do, right? You're not practicing discipline there. So stick to what you say, right? And for me, if there's no fair value gap present, I'm not going to take the trade at all. I don't trade using order blocks. I don't trade using breaker blocks. I don't trade using any of those things. Just because, or I guess I don't trade with them. I just don't use them as entry patterns. Like here, would this last downward close candle be utilized as an order block? Like, it's some people might not consider this an order block, and they might consider this down close candle an order block because it swept liquidity or something like that. It's just the whole idea is it's too subjective. However, a fair value gap is not subjective. It's like a fair value gap is either there or it's not. And yeah, so going back to the pros and cons, some of the things that I can work on is, so when analyzing a trade, I shouldn't do it like frantically, which is why I was present on the charts at 9:50 Eastern time. Last week, there's been 2 instances last week where I was going over the pros and cons, and 10 o'clock hits, right? And I wasn't even present in front of the chart, so I wasn't actively looking at the charts here. And I'm having to like scramble. I'm having to, okay, I have to. There's an objective right there. Okay, there's a model. There's a fair value gap. So even though all of those things were present, it's just the way that I analyzed things it was too rushed, and I just don't like doing things like that. So coming into this week, even if I'm doing like pros and cons or I'm doing anything, I'm gonna stop it, and I'm going to go back to the charts at 9:50 Eastern time to be active for the 10 o'clock open. Second thing here, maintaining complete focus on the task at hand. So this concept philosophy isn't actually, I guess you can apply it to trading, but this is like a whole like life thing here. And the whole idea is that you shouldn't allow yourself to be distracted, right? Examples of this is like if you're at the gym, you should simply only be focused on actually working out, like getting your reps in, focusing on the actual workout itself, and not going on your phone, right? So like between sets, between any workout, you shouldn't be on your phone checking what someone has posted on social media. If there's a new video that got released, anything like that can just disrupt your whole flow and momentum. And momentum is an actual thing, right? You're piling on and on. You can you're like, it's like you're hitting that gas pedal, but you're hitting the brake every like couple 5 minutes, and you're losing that momentum, which is like you're not adding on in that compound effect here. Let me see if there's an indicator. And I can't find it. So it's okay. Let me just search that one. It's like this. Oh, what the heck? Oh, exponential growth. So it's like this, right? Momentum works like this. You're slowly, and then you hit that stride, and you're like just going straight up from there. But distractions is not going to allow you to work in a way like this. You're going up, and then you get distracted, so you go down, and then you got to restart all over again. You're going up, distraction, boom, you're going back down. So just do your best. Do your best to stay focused on that task at hand. Once you're done with that task, then you can move on to another task. And this is going to, like, I guess, going to the third aspect of this, what I can work on, is your task, is your thought in alignment with your goals and values, right? Is what you're doing going to benefit you in any way in the future, or like even right now? It should have some sort of like value to you, right? If, like, for me, what I'm trying to work on is, like, whenever I say align my thoughts and my actions with my goals and values, is I have a tendency to sometimes, whenever, it's like on my downtime, or just like whenever, like, I'm preparing to go shower or something, I'm getting my clothes ready. There's multiple times where I'm just in the like the restroom, and I'm freaking on Clash Royale. That's like fine. It's just if you allow that to like progressively grow. Like, I shouldn't be, like, I don't spend an hour inside the restroom playing Clash Royale, but it's just, and are your thoughts in alignment with your goals and values? And yeah, like, maintaining that alignment is going to allow you to I guess, live a meaningful life, right? A life with content and a purpose. And what I would suggest you guys, this helps me, is having a vision board of what my values and what my goals are. And some improvements here coming into this week. Finding that consistency, right, between what the trades I take, having a higher time frame objective, having a model, having an entry pattern. All of those things is something that I should have present whenever I do take a trade. Actively watch the markets at 9:50. Laser sharp focus and aggressive trading. So with that, that's going to wrap it up for my pros and cons. Going back to the charts here, we're looking rather bearish right now. I'm not gonna lie, but yeah, this could happen. But we'll see. Because let's see what ES. So ES hasn't even taken out its high yet. So there is an SMT. But so let's see. 50-minute time frame. We are rebalancing this inefficiency again. Even though that I said that we might not. This is the whole idea of a stop loss and like a model, right? It prevents you from taking losing trades. So like I said, even though the higher time frame objective for me here is still higher prices, my model, there is not a model for me to take my trade off of. Higher time frame objective is there, just no model. So that's completely fine. Yeah, I'm just going to continue to wait. I do want to go over with you guys some rebalancing models. So here, rebalance models, right? Rebalance model is essentially when prices trades back into some sort of fair value gap to rebalance it. So if you know that prices likes to rebalance inefficiencies, likes to trade back inside a fair value gap, that means we could actually short here in this case. I know that it makes it does make sense, because the idea here is that we're going to rebalance this inefficiency, right? With the way that we close, even though that we might respect this fair value gap to continue higher, or we might completely disrespect it and then go lower. The idea is that we're going to rebalance it, right? So the bare minimum target here for this specific trade entry is a rebalance of this 1 hour fair value gap. So that's a higher time frame. That is one higher time frame objective. And so here for this trade, my higher time frame objective is to rebalance this inefficiency. And my model here is actually on the 15-minute time frame. The 15-minute time frame is suggesting to me that, hey, we're most likely going to take out this 15-minute candle's low, but keep in mind, the way that we close here on this 15-minute candle is not below the second fair value gaps candle's low, low. So that means we could end up rebalancing this inefficiency here on the 15-minute time frame. So who knows? But the 15-minute low is the same low as the hourly low, which means that we should complete this hourly higher time frame objective within the next 15-minute, which is why I'm basing my model here on the 15-minute time frame. And so there's a fair value gap here on the lower time frames. I take my entry and we get stopped out. Completely fine. That's not in my control, right? What is in my control is the ability of actually executing it. And to go over something that I missed during this trade is that, so there's a swing high here. Swing low to swing high. I'm not hourly swing low, hourly swing high. From that, there is a dealing range. Notice how we have already retraced back inside the discount of this dealing range. This is something that I didn't notice when I took this trade, so I'm like, okay, when I first took it, I didn't see it. So when I reviewed it, I was like, oh, when I took this trade, we have already retraced into equilibrium. So it would make sense that we could possibly, expand higher. So just something I missed. And the trade was there, was present. It just didn't work out, and that's completely fine. Some other examples of a rebalance model here, like here in this specific trade. In this trade here, this 30-minute candle here, and the way that we created this 30-minute fair value gap suggests to me that we're most likely going to retrace and rebalance into this 30-minute fair value gap. So that's my higher time frame objective. My model is based on this 15-minute candle, and the way that the 15-minute candle closed suggests to me that we're most likely going to take out the 15-minute candle's low. So coming into taking my entry pattern, I base my entry pattern based off of this 2-minute fair value gap here. Take my entry, targeting that 15-minute low, which ends up being the 30-minute low too as well. So we rebalance the inefficiency, we complete the 15-minute objective, and yeah, bam. So here is the rebalance model. And what I'm trying to get at here is, notice how these are occurring on every single time frame, right? We're rebalancing in this specific trade here. We're rebalancing a 1 hour fair value gap. In the other trade that I just went over, we're rebalancing a 30-minute fair value gap. These things occur every single day, but that doesn't mean that you should take them every single time you see it. Having a model and having an entry pattern kind of allows you to filter out the good and the bad. And yeah, just like I said, prices is fractal. These concepts apply or occurring every single day. So just be patient and disciplined with your approach. And with that, I think that's gonna wrap it off for today. I do want to go over daily quote here with you guys too. So daily stoic. Daily stoicism quote. So the daily stoic quote for today is, you have power over your mind, not outside events. Realize this and you'll find strength. And before I even break this down, these quotes are not meant for you to just take a look at and just completely forget throughout the day. Apply the concepts of these things, right? Understand and truly like allow it to resonate with you. That's where you're actually going to find meaning from it. If you just read this and just like read it and not even understand the context, then you're not even able to apply these concepts. It's not like a fiction book where you find enjoyment from reading these quotes, right? You actually have to apply it for it to actually work in your real life. So having power over your mind, not outside events. Like I said, there are things that you can control and there are things that you can't control. Understand that the only things that you can control is how you do things and how you think. What are your thoughts, right? Focus on what you can control. Life throws unpredictable challenges, but your reaction to them is entirely within your power. How you perceive a event, right? Whether that be something that could be seen as stressful, that's up to you. Strength comes from mastering your response. Let go of external worries, worrying about things beyond your control, like other people's opinions on you or unexpected events, wastes energy. True freedom lies in detaching from these concerns. Inner strength is key. The great resilience comes not from controlling the world, but from controlling your mind. Practicing self-awareness disciplines strengths. Practicing self-awareness and discipline strengthens this power. And with that, that is the Daily Stoicism quote. And if you guys do want to join the live, or not the live stream, but join the Discord, it's going to be in the link in my bio. You know, I have weekly market outlooks, and if you guys want, I could actually do like one-on-one sessions or whatever with you guys too, just so that I can implement the concepts and teach it on a more personal level. And with that, I believe that's gonna be all for today.